Welcome to the Budgeting Workshop. By the end of this presentation, you will have a much better understanding of how starting a budget can help you accomplish your short and long-term goals. The key topics that we'll be covering are why budget, obstacles of budgeting, categorized spending, the Categorized Spending Workshop, the Ideal Ratios tool, short to long-term goals, and at the very end, we'll close with some great resources. So let's get started. At some point in time, you may have asked yourself, why budget? Budgeting helps us achieve our goals, both short and long term. It teaches us how to spend and save with intention over impulse, and makes us more financially secure. Having debt can be stressful, so remember, always spend within your financial means. As Benjamin Franklin once said, beware of little expenses. A small leak will sink a great ship. Budgeting is similar to a healthy diet and exercise. We're all aware that they produce healthy results, but we often run into the obstacles of getting started and staying consistent with our goals. Take a moment to read the red text next to the stop sign. See if you can identify with one or two common obstacles. If you're like me, you can relate to each of these obstacles at some point in time. Now let's take a look at some of the positive results of budgeting next to the green traffic light. I personally have some expensive hobbies, and I love to take vacations. So my favorite benefit is being able to meet personal goals. Let's begin our budgeting journey by first categorizing our spending. Take a moment to pause the screen and open the Categorized Spending Workshop PDF, which can be found in the description just below the link to this video. Great, now let's begin. Welcome to the workshop. To participate, you'll need to open your most recent bank statement. We'll be assigning each purchase on your bank statement to one of the 4 categories shown below. It helps to highlight or to initial each item on the statement. The 4 main categories are housing, food, debt, and personal. Next to the categories are examples of corresponding items that you may find in your own statements. These categories can mix a little bit and are intended to make sense to your own budget. For example, coffee out can go into the food category. However, I see my daily coffee expenses as a lifestyle expense rather than a part of my grocery bill, so I'll include it under the personal category. Here's how I went through my statement. In this example, I'll be using a highlighter with the colors that were shown on the previous page. Starting with housing. This should be the easiest expense to find because it's typically the largest expense each month. Then I'll mark off expenses related to housing, like a separate electric bill and insurance. Next, I've highlighted my food expenses and bills, followed by my personal expenses. Be sure to notate your income. The difference between your income and expenses will be the amount of savings you'll have going into the next month. So let's see how I did. Let's take a look at my summary before creating a budget. The income in my statement showed a direct deposit of $3,800. After adding up the 4 categories, I've spent a total of $3,240, leaving me $560 of savings, which amounts to 14.73% of my total funds. Now some of you may be thinking, that's great. However, without goals for my savings, I can't be sure that I'm setting myself up for success. For example, if I needed to put aside 20% of my total funds, I should have saved $760. Goals and budgets are constantly changing. Later we'll talk more about the ideal ratios and create short and long-term goals. For now, let's review the workshop material. The Categorized Spending Workshop PDF is a fillable document that you're encouraged to type directly into or print to fill out. The first page focuses on your income. Next is housing, which includes your rent or mortgage payment, utilities, and other housing expenses. Next, we have food. This category is flexible, so if you end up going over budget, consider making adjustments here. The next category is debt. If you have a history of on-time payments, consider refinancing a loan to get a better interest rate or to extend your loan's term. Both options can lower your monthly payments. The personal category often has smaller, more frequent purchases. This is also a flexible category that should be looked at closely if you need to cut back someplace in order to meet your savings goals. Lastly, we have savings. If you currently don't have a savings goal, this is a great place to start. The amount that you see here are the remaining funds from your income found on page 1. To conclude this workshop, we will follow an equation using the totals from each category, starting with housing on page 2. The expense total will reflect every item purchased on your bank statement. Next, we'll subtract your total gross income from page 1. That will give us the amount of savings you have for the remaining of that period. Next, subtract your committed savings, which is the dollar amount that you're committing to save each month to achieve a goal. All additional funds should be considered savings. However, committed savings is the amount that you will not spend to ensure that you achieve your goals. The remaining funds can be seen as an allowance. This is a pre-filled example of what the process may look like. In this example, I have a savings amount of $760 and a committed savings amount of $360, which leaves me an allowance of $400 each month. That equates to spending around $100 each week on anything I like. Having this number in mind helps me to manage a running tab of leisurely expenses. For example, if I purchase an item for $350 in the first week of the month, I know that in the following 3 weeks, or for the remainder of the month, I will only be able to spend $50 on leisurely expenses. And since my daily routine includes a $3 coffee, I know that I will spend at least $70 on coffee alone if I continue that habit for the rest of the month. To avoid dipping into my committed savings, I'll need to make some adjustments due to the large item that I purchased in the first week of the month. Welcome to the Ideal Ratios workshop. For this workshop, we'll be using a budgeting tool. Take a moment to pause the screen and open the Excel file titled Budgeting Tool to compare your budget with our ideal ratios. The file can be found in the description just below the link to this video. Review the reference guide on the next slide to become acquainted with the budgeting tool. Start by entering the monthly income. The total should match the monthly income. This number will automatically calculate as you enter new amounts in the 5 colored categories. To the right, you will see your totals as a percentage. The center shows a pie chart reflecting each category's percentage. And the difference column on the far right shows the dollar amount that you're over or under in relation to the ideal percentages. This demonstration will showcase the functionality of the budgeting tool. Your total should always match your monthly income. So here I can see that I'm off $100. It helps to look back at pages 1 through 6 of your Categorized spending workshop to fill in the totals in the appropriate categories. Here I see that I missed this personal category, so I'm filling that in. Once they match, you can see the percentages of how much you're spending per category. Moving across the pie chart, you'll see the ideal percentages and the ideal dollar amount that should be spent for each category. Now that our spending and savings are closer to the ideal ratios, let me ask you something. Have you ever tossed a basketball over and over into a field without a hoop? Probably not. That's because our actions would not be fulfilling the basketball's intention or purpose. You see, we need a target to shoot towards. Likewise, our savings should be fulfilling a purpose for our lives, and without a reason or goal in mind, it may seem pointless, like tossing a basketball without a hoop. Short-term goals are 1 to 2 years and can be saving for a vacation or having holiday funds. Midterm goals are 3 to 5 years and can be repaying debt, saving for a wedding, or buying a new car. Long-term goals are 5 or more years and can be a retirement goal, like purchasing a boat, or a large down payment on a house. Take a moment to consider a few goals that you would like to accomplish. Now that we have some goals in mind, feel free to write them down under goal in the appropriate term. If you don't have a target date, enter the month or the year that you wish to accomplish your goal and how much funds you'll need to do so. Lastly, we'll want to know how much of your savings should be deposited each month to accomplish your goal. And at the very bottom, we'll see what your committed savings will be. This won't be your entire savings, but it'll be the accumulation of your monthly deposits. This will ensure that you stay on pace to accomplish your goals in time. Before closing, I want to share some great resources to help you check your credit report to ensure that all the inquiries and information is correct, and to be able to dispute any items if needed. On the right-hand side, you will see links to the 3 credit bureaus along with a free annual credit report service. Princeton Federal Credit Union would love to help elevate your credit score and guide you along a 3 to 12 month process of elevating your score. It's entirely free for members and non-members to take advantage of. My contact information is at the top right, and just below is a link for your free credit score analysis. Below that is a fantastic resource called Balance. They cover many financial topics and provide a wide array of tips and advice. Our branch location and hours can be found at princetonfcu.org. We hope you take a moment to visit us online or stop by in person. Thank you and have a wonderful day.